You look at the latest Wall Street Journal poll, who's best to handle? Immigration, Republicans in Congress, 44, Democrats, 33. Economy, 38, 32. Tariffs, 36, 34. I mean, it's one poll, but it shows you that maybe it's not moving as much as people think it is.
No. Situations like this with Don Lemon and the church are not helpful. Look, I don't believe that faith and politics are mutually exclusive. The people who led the civil rights movement were church leaders. But this is not the civil rights movement. And this is harkening back to 2020, where we saw people from outside of a community engage in civil unrest and leave. Don Lemon doesn't live in Minnesota. He is not going to help that community heal and get put back together. And people are watching.
And if we don't raise interest rates every time good news is mentioned, in the old days, I'm probably old, I used to be up at these lecterns and I'd say I'm younger than pretty much everybody in the room. Now I say I'm older than pretty much everybody in the room. I like it the other way better, actually. But you're too young. But in the old days, when you had good numbers, interest rates would go down. When you had good numbers, the market would go through the roof. That's the way we're going to make it again. That's the old-fashioned way. That's the right way. Today, if you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. What happens and what we want, we're going to have a lot of great months, a lot of great quarters. I want the market to go up. You announce unbelievable numbers and the market goes down because they know you're going to do everything possible. In the Fed, we have a real stiff in the Fed, but that's for another day. But they raise rates. So everyone says, oh, they announced great numbers. It's great, great, great. And the market goes down because they immediately raise rates. No, when the market goes up, they should lower rates. You want to see 20% and 25%? You want to see what we can do? We've got to go back to an old standard. When there's good news, the market should go up, not go down. Does that make sense to everybody? And that's the way it used to be for most of the time. That's the way you make a country great. But our growth potential is unlimited and could be much higher if we went back to sanity. We're not doing it anymore. We're talking about the head of the Fed, and I want somebody that when the market is doing great, interest rates can go down because our country becomes stronger. See, you view it differently. Our country becomes stronger, and therefore interest rates should go down, not up. They kill every rally. If it's, no matter who, if it's beyond me as president, it's no matter who's president. You have a good quarter, and they want to kill it because they're so petrified of inflation. And growth and inflation don't necessarily go hand in hand. You can have growth and very low inflation. In fact, oftentimes growth is good for low inflation. So we're going to work on that, Scott, right? I think we're going to work on that very hard. I mean it so strongly. It's sickening. We announce good numbers, and we see the stock market drops 300 points. I say, what the hell is going on? Do you agree with me? It should be just the opposite. All right, Scott agrees, so I'm very happy about this. That means if he didn't agree, I wouldn't do it. But we're already growing double, triple, and even quadruple the speed of almost every other major economy on Earth. We're the #1 economy on Earth, too. And the results are in, and the Trump economic boom is officially begun. It's really begun almost from the beginning. Almost begun, if you look at it, really from November 5th.
Well, as you just heard on that lengthy press conference involving Donald Trump, he's off to Davos after his phone discussion with President Erdogan of Turkey, where Greenland will no doubt be the topic du jour, and it'll have an effect on our market. So let's bring in the StockSpot founder and the CEO, Chris Brikey. Chris, it's good to see you. Happy New Year to you. First time I've seen you this year. So what's the fallout been overnight with all this talk about Greenland and whether or not it'll be bought or sold?
Good morning, people. Well, yes, it was a pretty rough night overseas in markets. We had the US market down just over 2%. Of course, it was closed for the MLK holiday yesterday, so we saw 2 days worth of falls, really. But I had a look at the futures market while Trump was talking, and it didn't really alleviate any concerns. Markets really closed on their lows, and I think the real concern now is bond markets. We have the Japanese bond market imploding, and now the US bond market has started to fall as well. That could be the pressure point that actually causes Trump to pause, because it did last time there was tariffs in 2025.
Just on that, because while we were looking at the same thing probably, Chris, about the Japanese 40-year yield nearing 4.3%. which, as you point out, is going to ripple through global financial markets. Can you just elaborate that simply for our audience on what that means and what sort of an effect we are likely to see?
Sure. So the government debt in Japan is traditionally really traded at a very low yield, around 0 or 1%. And even a year and a half ago, very long dated government debt in Japan was trading around 1.5% per year. That rate has now increased, as you mentioned, to over 4% for 40-year government bonds, which is really the market saying that they don't trust the ability for the Japanese government to pay the interest over the long run, and they think there's a lot of risk. And particularly as inflation is now increasing in Japan, people are concerned that debt isn't something you want to own. Now, how that impacts other global markets is that the Japanese market for debt has been one of the sources of cheap funding globally for the last 30 or so years. So if that disappears, it might actually lead to capital coming out of other countries like the US and back into Japan. And so I think all eyes at the moment are on the Japanese central bank at whether they do what's called yield curve control, which basically means selling more of their yen to control the price of debt in the long term. That would be bad for the yen, but potentially good for the share markets.
Maybe that's good for gold too, is it, Chris?
Well, I think all of this kind of points to the same situation for gold, which is that investors are just so frightened about the ability for all governments to pay off their debt. And Japan and the US are the two biggest examples.
Yeah, when you see that giant landmass of Greenland straddled right between Russia and the US, I mean, it's the most direct way that you would send a missile to the US would be essentially over Greenland, really. I can see why it's so strategic. But what about the damage to America's image and just seeming to threaten? I agree with you. It seems to me just a typical Trump bluff, a bluster, attention seeking, get people to negotiate and make him a deal. But the damage that does to America's alliances and particularly the public support for them, does that concern you?
Well, yes, it does. But I do think where the president comes from, he likely believes, yes, this will last for a few weeks, but if we can get to a negotiated deal that benefits all parties, that will long since be forgotten. I think that's kind of where we are. The president has wire brushed the Europeans at times pretty significantly and threatening to pull out of NATO if they don't cough up increased defense budgets. When he said that, I never believed for a minute that President Trump would pull out of NATO, because I just happen to know he believes it's in the United States' vital interest, both politically and militarily, be a part of that alliance, and it serves the interest of the United States and the stability of the world very well. But nonetheless, he made some pretty strong rhetorical statements about all of that, and I do think we've recovered from it.